Welcome back. You're tuned in to Chartbusters. You're on CNBC-TV18. Well, it's results season and results are coming in thick and fast. Well, to understand another company, that's Galaxy Surfactants, we're joined by Mr. Shekhar, the managing director of the company. Good morning, Mr. Shekhar. First up, festive greetings to you, your family, and your entire team. Wishing you all the best for the second half of the year. And I think, you're going to be giving charge to someone else in the second half of the year. It's always been good having you on the show. But for the time being, let's address the near-term outlook for the company. Well, tell us, Mr. Shekhar, we normally ask you for two big numbers. One is in terms of volume growth, and in the past, you've been talking about 6 to 8%. Do you maintain this? Do you want to upscale or downscale that? And also the EBITDA per ton, you've pulled back your guidance by a couple of thousand rupees. Is there a downside risk to that as well?
A very good morning to you and happy Diwali to all of you. See, this quarter has been particularly good because we have grown in volume across all categories, all regions, all segments. So for the first half, if you see, our volume growth has been higher than the indications that we had given. So for H1, the volume growth stands at almost 9.8%. And if the same trend continues, we would be very happy to touch at least the double-digit figure by the end of this year. So volume growth has been encouraging, and particularly in India. India has been a robust and a rocking story. And we have seen volumes coming back in Asia Pacific and the Africa Middle East region. The only worry remains as far as America is concerned, where we hope that beginning next financial year, we should see volume coming back even in the Americas. So this has been the trend, because this particular volume growth that we have seen has come after almost 10 quarters or so. Okay. With respect to the EBITDA per ton, I think EBITDA per ton is a reflection of the product mix. And as we said, once we see the specialty coming back with full force, we should see the EBITDA per ton going up. That is what I would like to say as far as the outlook in terms of the future is concerned.
But for now, you want to maintain the EBITDA per ton at 19,500 to 20,500, right?
Yeah. We hope to close this by the end of this year in this particular range. Yeah.
And the 10% volume number that you were talking about, for the year on an average, will grow by 10%? Is that what you're trying to tell us?
Yes. That is what we would like to aspire for, yes. Compared to last year. So in H1, we have grown by 9.8%. So we would, if the tempo is maintained, we should, aspire for at least the double-digit number. Yeah.
Right. Mr. Shekhar, good morning. First of all, festive greetings to you and everyone in your team as well. You plan to do a capex of 150 crores every year. I'd like to know how much of this was done in the first half of this financial year, how much of it is left. And I'm asking you that what would this be on? Because you've already undertaken a lot of capacity expansion in the past as well. How do you plan on utilizing those funds?
Yeah, see, this capex are continuing capexes in terms of debottlenecking, both on performance surfactants as well as the specialties. So I guess we must have already completed spending something like 75-80 crores, and by the end of this year, we should be spending the balance amount, and the total should come to approximately maybe 150 crores or so. Yeah.
Okay, all right. On the current capacity, sir, what is the current utilization level?
We are at approximately 69 to 70% overall. Yeah.
And you expect this to move up as well? You have been in this 65 to 70%, I think, for the last few quarters. Given that volumes are coming back, you're expecting it to move up further?
Yeah. No, as we said, see, what we are also continuously increasing capacities. So it has hovered around 69 to 70, because as I've told you, once it reaches 80, 85, we immediately take up capacity expansion. And this 69 or 70 I'm talking about is average. So there are certain categories where the capacity utilization will be higher, and we have already initiated capacity expansion in those particular categories of products. And so this 69 to 70 has hovered around, and we are prepared. We are prepared as far as volume increase is concerned from the various markets. That's why we want to be.
Can you elaborate the categories where you have already initiated capacity expansion, which is already higher, Mr. Shekhar? And part 2 of my question is, you've also approved the formation of a wholly owned subsidiary in Europe. What would that be for? Are you looking at more expenditure in that geography? And are you looking at manufacturing there or only for trading and distribution purposes?
No, this is primarily for distribution to be nearer to our customers, do warehousing so that we are ready to be able to respond to our customers quickly in terms of delivery and their requirements, So this is primarily for ensuring that, we create warehousing in Europe and are able to be more closer to customers in terms of their needs.
The last quarter you mentioned, the last time you spoke to us, you mentioned that value-added products are around a third of your overall top line. What has that number been this quarter? And do you see that improving any further as we go into the second half of the year?
No, this will remain more or less, similar, let us say 2/3, 1/3. Okay. And because the performance surfactants are again, growing, particularly well and significantly well in the various emerging markets, and particularly because of the high inflation, a lot of customers and consumers, have shifted over to masstige products from the prestige products. So mass and masstige have been on the rise in the last, particularly 1.5 years or so, which require, significant amount of performance surfactants. So the specialties, have to come back, but will come back. Once you see the inflation moderating and the customer, having more money in his wallet to be able to spend on specialties.
But do you see that trend continuing in the second half as well, this shift from prestige to masstige?
Yes, very much, because we do see that, the things have been getting exacerbated by various developments which have been happening, whether it is the new, Gulf War, which has happened, started happening about a month and a half back. So the destocking, particularly the developed market, both Europe and US, have talked about destocking and then clearing the inventory in the pipeline. So these are things which we feel will get completed in another 3 to 6 months or so. So we expect the new financial year, that is 24-25, to be bringing back consumption in the various markets that we address. We are already encouraged by the uptick in demand from India, which has been a robust story for quite some time now. Asia Pacific has come back. Africa, Middle East is coming back. We would like to wait and watch for one more quarter to be able to say that whether Africa, Middle East is back to the original level of demand and consumption.
Okay, Mr. Shekhar, we appreciate you joining in. It's been great interacting with you all the way since the time you listed. Wishing you a good second half of the year. And as you move on as well, giving charge to someone else, wishing you well and hoping to keep in touch with you.